Today I will be teaching you exactly how to read candlestick charts with absolutely no experience required. Welcome back to episode 3 of the Zero to Hero series, where I take you from an absolute zero to on your way to becoming a hero in these markets. So for this episode, we're going to just jump right in and hop on the charts. When you open up TradingView, you're going to see something similar to this. You might just pull up an ES chart. For the sake of this discussion, this is what we will be doing. So number one, whenever we're looking at charts, we want to be looking for two main criteria. Old highs, swept, and number two, we want to be looking for areas of fair value. So with this in mind, we will go through these charts and we'll see what we notice. If we start back here, we can see clearly there is an old low, right? And as price progresses, we see that we tapped into this old low. And then where can we potentially go next? We see an area of fair value. Now, this level may hold, or we may invert it and keep going higher. Time will tell. As you can see, we start to see bullish indication. We see a small reaction here. Initially, it holds lower, but now we see that we are displacing once again. We create another fair value gap right here and right below, so we can mark this out as well. We see that price has now created, number one, a shift right here after sweeping these lows. So we have a sweep of lows, a test of a fair value gap, a market structure shift, and a test of the fair value gap up here as we hold higher. So now as we continue forward, we see yet again another daily fair value gap for ES. And where are we headed next? Old highs. Boom. So where do we go from here? We see that once again, we are starting to create a fair value gap. But as I just mentioned, we ran out this old high. So the question is whether we roll over or continue higher. Initially, we see some signs of rejection. We see there is a market structure shift right here, potentially, as well as a bearish fair value gap. Now, where we go from here, we have to see. Do we hold this? And it seems that we do hold this as an inversion, where we now run this high. So this failed market structure shift is really just a sweep of an old low. We can note it as such. Similar to this right here, we have a sweep of an old low where we now continue higher with another fair value gap that was left behind. So as you can see, we have areas of fair value where price is supported by it, as well as old highs and old lows, which act as areas of interest as well. When they are swept out, we can see a potential opportunity to take a trade. Yet again, we have another daily fair value gap. When you have a daily fair value gap, you're going to get an intraday reaction versus that. These daily reactions to fair value gaps will give us entries on a lower time frame. We'll come to see that in just a short minute. Once again, another daily fair value gap. And we see that price is largely supported by it. So as we continue higher, we have a sweep of old highs. If you look at this, we see that there was a sweep above. 2 days, equal highs, sweep above, closes below. When we go below that prior day low, we see a potential shift. Now, here is our market structure shift. And we leave behind a fair value gap. Now the question is, are we going to test this fair value gap? And it seems that we may do that on this session right here. So if we go ahead and start to look at the lower time frame, we will go to right here, just before we test the daily fair value gap. We can go ahead and look at the 5 minute and see how we react. We are now testing it, and if we go to the 1 minute, we see that we have a move higher from the New York Open as well as relative equal lows right here. So when we test this fair value gap on the daily chart, we want to look for a lower time frame entry model based on that reaction. So we are using 3 steps for this process. A higher time frame level, something that is important, something that is relevant. We want a lower time frame entry model, and we want a logical target. That is our 3-step approach for this setup. So on this candle right here, we see that we actually were given a lower time frame lower time frame market structure shift on a 15-second, and when we look at it on the 1 minute, we were given a fair value gap. So this fair value gap can be used for an entry model. We look to short right here, and we wait until it gives us our target where we cover. And that is exactly how you combine a higher time frame location with a lower time frame entry model to ultimately create a high probability trade. By just combining these few steps, you will ultimately avoid so much noise and optimize your trading experience. This is my exact process when I go through these charts. I simply look at the highest time frame first. I start on a daily chart. I can go then to a 4-hour, to an hourly, and all the way down to my execution time frames. By simply starting on the highest time frame, I'm ensuring that I'm going to see the highest time frame level of interest. If it does not exist on that time frame, I will drop down another time frame. But by combining a higher time frame bias with a lower time frame entry model, you will avoid much of the noise that price often shows on the lowest time frames. Trading can be extremely simple. As you can see, up until this point in the series, we've only talked about a handful of concepts. In this video, we pretty much applied 3 of them. We talked about old highs and lows, fair value gaps, and market structure shifts. By simply combining the higher time frame, using these strategies and concepts, we're able to craft a really killer trade setup. So if you got something out of today's video, be sure to like, share, subscribe, and don't forget that in this upcoming video, we will have a live execution example using these concepts that have been explained to you throughout this series up until this point.